Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Wednesday, July the 23rd, 2025, recording this in the morning. Okay, so sort of the big news overnight is basically we'll just have the Japanese yields up here on the 30-year. The big news was the so-called sort of big trade deal announced between Japan and the US. There's a slightly different sort of viewpoint from what the Japanese Prime Minister Ishiba is saying, and compared to what Trump is saying. Trump, of course, is saying it's the biggest deal since forever, whereas the Japanese are a little bit more circumspect. But basically what it seems to be is that rather than sort of 25%, it looks like 15%, so 15% tariffs overall on Japanese cars. Now that's technically, maybe a slightly better outcome than had been feared for Japanese car makers. We're seeing Japanese stocks rally because they had been fearing sort of 25% tariffs. So 15% tariffs overall on Japanese products. The idea is that the Japanese, in theory, at least will be investing $550 billion into the US, some kind of sort of investment fund. There's talk of sort of an LNG sort of a complex, a joint project up in Alaska. On the other hand, there's also talk of the Japanese buying a lot of Boeing aircraft. On the other hand, the Americans, although Trump is saying that Japan will open up its markets a lot more, will take down some of those sort of import sort of barriers, opening up some agricultural products and allowing a bit more free trade, a bit more access to American products going into Japan. So the markets reacted quite positively. But of course, the details will have to emerge and we'll see. But I think the market has basically taken away that this is a bit more stability. And I think we're getting to a point where, as we approach the August the 1st sort of tariff deadline, yet another deadline, the market just wants clarity. And I think probably industry and business just wants clarity to say, okay, if it's going to be 8, 10, 12% tariffs, we'll figure it out, but we just need to know before going ahead. And that's why the markets are rallying this morning. But before we just look at a couple of those charts, I just want to show you a chart here. This is the Japanese 30-year, this is a 15-minute chart on the Japanese 30-year. This is the yield. So what you can see here is it's been pushing up and also pushing up quite a lot overnight. And that's just because despite the fact of sort of the trade deal, there's still quite a lot going on in Japanese politics, and there's been news, sort of headlines, reports, rumors that Japanese PM Ishiba will step down from his role within the next few weeks sometime and sort of essentially take responsibility for the weak showing in the upper house elections of the Liberal Democrat Party on the weekend. So the thing here is, though, because what's happening is that as the Liberal Democrats lose their sort of very strong position, and they maybe have to sort of go into more coalition talks with opposition parties. Those opposition parties are going to demand more sort of social spending, more deficit spending, and this is putting upward pressure on the bond yields and just creating a bit of uncertainty also around the Japanese yen. So you can see here the yields going up, and that's reflected if there was a 40-year auction, so an auction for the 40-year Japanese bond, and that's why I have the 30-year up here. And that actually went quite poorly. So if you look at some of the metrics like bid to cover, the bid to cover was 2.13, which, the 12-month average is 2.48. So 2.13, much lower than 2.48 as the average bid to cover, just showing that the market is stepping away a little bit from the super long end or the so-called super long sort of Japanese bonds. Now, ordinarily, you would have thought this would be sort of good, so to speak, for the Japanese yen, sort of higher yields and whatnot. But as I say, the uncertainty, the Japanese yen is not enjoying the uncertainty. So let's just pull up a yen chart here and just put that in the context of, let's have a look, just bring up the yen. Where are we? USD yen. So what you can see here is that the US dollar, it's not as though the yen's collapsing or anything. And you can see here the US dollar over the last few days has fallen. But basically the yen is still just needing a little bit more or sort of clarity sort of politically. And also you have the BOJ. So last night we had the BOJ deputy governor, a gentleman called Mr. Ushida, who basically said, and this is a quote, the BOJ is in no hurry to raise rates. And they'll have to see, basically they need a bit more time to see what's going on with the trade deal, with the tariffs. But on the other hand, he did say that there was sort of wage pressures were going up gradually and inflation was still a little bit sticky. So at some point it might be necessary to what they call normalize rates. And so we could get a hike from the BOJ, but maybe not super sort of short term. If we just look here and just see what's basically the market's pricing in at the moment, let's just have a look here. So if we go over to Japan, we can see that for the end of July, so the meeting upcoming, you can see there's basically zero chance of a hike priced in. And we have to go out all the way, not even for the full end of the year. There's not even a full 25 basis point hike priced in by the end of the year. You see, we're at an 80% chance, which equates to about 20 basis points by the end of the year. But it could be that, as we get more to this maybe October meeting, maybe that pricing is going to go up a little bit if we continue to see sort of inflationary pressures in Japan, if we continue to see upward pressure on wages. And once, presumably by the time we get to sort of October-ish, a lot of the uncertainty around the tariffs and the trade deals, as we just saw overnight, that will have dissipated. Maybe the political situation would have calmed down a little bit. And therefore, the BOJ might be more comfortable to continue their hiking path. Now, in theory, at that point, that could be a positive for the Japanese yen. But at the moment, the Japanese yen kind of stuck in a little bit of sort of a trade range. And just for the moment, and just is sort of keeping that on, although the dollar is showing sort of weakness at the moment against the yen, we can see that here. You've got to say that, I'm just curious to see if this sort of stabilizes at some point, because we have a relatively neutral BOJ at the moment. And if, for example, the Japanese do start to do very large scale sort of investments in the US, that would be a yen negative, as well as as those yen are swapped into US dollars. So interesting to keep an eye on this. I think personally, rather than the US dollar completely collapsing here down to, let's say, 140, maybe sort of a trade range is the more probable sort of outcome here. So I think maybe we'll get a trade range of, let's say, something more like about sort of 142 up to about 148, this kind of trade range in here. But interesting things happening in Japan. And of course, the market, which did really enjoy that, was, of course, not so much the Kospi, the Korean, but the Nikkei, which is here. So if we look at the Nikkei, you can see here that that's kind of pushing out of this range. I've got this range here marked in these sort of light pink, sort of lilac colors here. You can see a big green candle here. So let's see if that continues throughout the day. But especially the Japanese automakers happy. I'm not going to say happy, because now they seem to have 15% tariffs on not only on cars, but auto parts going into the US. But I guess the good news is that it's not 25%. And at least the good news is that seems to have stabilized the situation, and clarity is, after all, worth something. Just talking about that, all of this sort of news out of Japan, it's kind of raised the prospects that there might be deals, sooner rather than later, perhaps with the European Union before August the 1st. We saw yesterday at the White House, the Philippines leader sort of chatting with Trump, and there was some kind of trade deal announced between the Philippines and the US. So it does seem there is a little bit of sort of momentum towards that. And the market, I think, is sniffing out that, even though it's imperfect and it's going to be a bit chaotic, the uncertainty surrounding tariffs and trade as slowly dissipating. Now, of course, on the other side, there are a bunch of commentators who are saying that that's going to be a negative, and this will all eventually cause a slowdown in global trade, and especially a slowdown in the US economy. We don't have a lot of economic data this week from the US. In fact, today we just have existing home sales. We're going to start getting a lot more data next week. So at the moment, the employment situation seems to be okay. Retail sales seems to be okay. There's always going to be sort of cracks in the system, and commentators looking at different data. And there's also this notion that the Fed will be behind the curve. And that's what we saw from the big speech last week from Waller, essentially saying that in his view, there are already sort of indicators that the US economy is slowly cracking. We shall see. But just for today, at least, there is a positive risk sentiment. You see that obviously in the Japanese stocks. If you look across to the US, you can see, a bit of positivity here in the ES futures overnight. They definitely seem to be grinding above this sort of a little sort of midi sort of consolidation range here. And we have earnings this afternoon after the bell. We have Tesla and Alphabet, or Google, Google or Alphabet. So let's see how they go. AI forward, sort of prognostications and whatnot. And if they are positive, no reason here why the ES can't push higher. And of course, Nasdaq as well could push a little bit higher. But as I I think I mentioned a day or two ago, if you look at the Bollinger Bands, for example, just as an indication of overextension on the monthlies, especially, they're really at the top of those monthly Bollinger Bands, especially on the NQ here, and that's often been a sign of just a short-term pullback. We'll see how we go with the earnings this afternoon, and then of course next week we get 5 out of the 7 Mag 7 earnings, which will give us a much better sense of where those sort of huge companies are going. As I say, though, today we do have sort of relatively positive sort of sentiment. Also, you see the emerging markets up pre-market, EEM, the EF, and that's just because there's that positive news about the huge project in Japan, in Tibet, the big dam, which the Chinese apparently going to start sort of constructing, which is going to be a huge infrastructure sort of project. We also saw this, the trade deal with Japan, of course, and so what that means is that some of the bond markets are under a little bit of pressure. Maybe not so much in Europe here; it's come down a little bit, but we see, I think, on the 10-year, you see that sort of just under a little bit of pressure here. But more to the point, we can see that in the precious metals or the metal space in general. Sorry, I just want to bring it up. Where are we? So we look at gold, sort of pushing a little bit higher, but silver, which of course has a lot of industrial applications, breaking out to new highs, almost up to $40. So silver pushing a lot higher. And we can also see in copper having a nice sort of push higher as well. So we had that initial spike a couple of weeks ago on the Trump tariff headlines. We had a Fibonacci kind of just a retrace down here about 50%, and looks as though copper's pushing higher. So all of this stuff with industrial metals and semi-industrial or semi-precious metals, that's quite good for sort of the commodity currencies. So we're seeing things like, let's have a look at like the Aussie dollar doing quite well. If I can bring up the Aussie, so the Aussie dollar, as you see, a big sort of push higher here, coming to some resistance. I think if you look at, let's say, something like, let's have a look at the South African rand. Let's just see if we can see that USD, or is it ZAR? Let's have a look at that. Yeah, so you can see the US dollar weak against the South African rand, and then against the real as well, Brazilian real. Let's have a look at that. You can see we're not doing too much. That's sort of flattish, but in general, sort of the commodity currencies doing quite well. Commodity companies, EEM, are doing pretty well. So there's just a little bit of sort of positivity. Let's see if that continues. And if we get good earnings, there's no reason from the US. There's no reason why the US stocks can't continue higher. As well. Just one thing I would say, just having a quick look, I just saw some headlines. I just want to check from Besant, the Treasury Secretary. The pressure continues on Powell. You see here, what is Besant saying? This is like just from a few minutes ago at it looks like an interview. I see strong Fed chair candidates at regional banks. Would be very good if Powell left in May of 2026. They don't want to stay on. Bowman, BOE, etc. Mission creep, not crip creep, puts monetary policy independence at risk. So the point is that even though Besant and Powell continue to meet regularly, there's definitely a lot of pressure on Powell continuing politically from every angle, from the White House, from the Treasury, from the head of Fannie Mae, Fannie Mac, the housing sort of entities. So Powell definitely under pressure, but he is holding firm. And of course, next week we have the FOMC meeting, which will give us a bit more clarity on all of that. So that's about it, guys. I'll leave it there. As I say, we don't really particularly have any data today. I just want to double check that. We do have oil data. We had an inventory fairly flat last night from the API. Let's see what happens with the inventory numbers this morning. Tomorrow we get some interesting stuff, but in terms of today, just existing home sales, and that's just going to be. We'll keep an eye on that because a lot of the criticism of Powell is that he's keeping interest rates elevated and therefore mortgage rates elevated, and that's putting a lot of pressure on the housing market, according to sort of Trump and others in that sector. Okay, I'll leave it there. Have a great day, and we'll keep this going tomorrow. Thanks so much.